team meeting, I want to say it was on Monday or something, and Coach Lee was like, look, we're reaching out, we're trying to play, we'll keep you guys posted, but I guess because of logistics and things like that, it might not be happening, so that's pretty sad. But I think it's must-see TV, you know, a lot of people would want to see us play in Miami or another game, and like Coach Lee says, we'll play anywhere, any place, just football.
Miami, we're throwing Utah, another one that says it's a good game. Arena, what's wrong? What's up?
We'll play Boston, anywhere, any place. Just give us a chance. That's all we want.
We're going to make this happen. What are your thoughts going on?
I think it's a lot of politics at the top of what's going on. And I think you look at our strength of schedule at the beginning of the year, the who we beat, when we beat them, on the road, and it just, there's no other Tennessee team, SEC team left out. That's what they, and then, they have Kevin, we have us too. I don't know what's going on or what they're thinking out there, but I feel like we deserve to be in the college football.
Do you think this has something to do with this? Do you think you're being punished for being
For sure. I feel like that's the biggest thing. A lot of being punished. If we had another logo, we're in the college football playoff, no question. And I think if you just put everyone's resume on a piece of paper and you split it out to the teams that are on the bubble, they're treating ours every single time. It's been a really electric movie. I feel like just the people that are in this building, honestly, I feel like Coach Lee has done a great staff. I was fortunate enough to get recruited here from my coach from New Mexico State, something like him for 4 years. And they're just real genuine people. They'll tell you how it is. They'll tell you what you need to get better if you want to see the field. And I wasn't always the starter. I wasn't always the starter at New Mexico State. But that's why I respect Coach Lee more, because he told me what I needed to do. I did it. He made me starter to start winning football games. And the most special thing about this whole team here at Vanderbilt, I think it's the character that all these guys have. There's so many personalities growing. And everyone gets along. Everyone loves each other. Everyone wants to hang out with each other. There's concerts every day here. We all go over, check it out. There's a press game. We check that out. So I'm so fortunate to be in the city of Nashville. I think it's the greatest city in America. And I feel like, we just want something to play for.
How much do you embrace? It seems to me like the way that you see somebody go underdog mentality. Is that why it's a great sport so well with you?
Always a perfect story. And we were shirts in the ball today. We had a written on the chest called Misfits. We were on before the game. We were like, everyone's a misfit. And you think about our team, Juco under-recruited, Eli Sellers of our first-round tight end, who started off at quarterback, no one didn't have the portal. A running back, MK, who was scrubbing toilets last year at this time. You got Trey Richardson was a D2 kid, junior, who really no one wanted, but he was in-state, so Danny took it. I mean, you look at all these guys on the team. Gabe Fisher, who was leaving a source, Richie Hoskins, who came from a D3 lacrosse team. Like, all these guys are starting on the team. It's like, oh my gosh, like, this is a perfect opportunity for every single one of these teams. And we're just so blessed to be on a team that I feel like that's why we also. Games and watch them in the stands, they're the same way, so they want to be in the team, they love every single player, they support every single player here at Vanderbilt, they love them up, and anytime anyone wants to come hang out, they're family to us.
It's been fun to watch, and in your time, I'm going to ask you a question. What do you remember most? hopefully gives everybody a little bit of breathing room to get through this stretch. The question is, can the Bucks win enough games without Giannis and stay competitive and continue to make a compelling case to stay in Milwaukee versus escalate this to serve as a major discussion for the team? Part of the season without Giannis. If he does get through before the deadline, it would be the first multi-time MVP to get traded during the season. Let's go off last. The Clippers, they shot the NBA World Cup 7 times. But the beautiful thing was that he and Cheryl laughed on FaceTime with his former Boston teammates, Blake Griffin and DeAndre Jordan. So obviously, when one of the teams that are working or seeking to reach next steps in this year, where do you think this is going? I don't think they go anywhere very quickly because he can't be traded until this season. And it's going to take some time with the teams that I think would have a need for Chris Paul will be open to that idea. I'm talking about teams like the Dallas Mavericks, who right now Ryan Edwards playing a good role. At point guard, he's a two-way guy. They clearly need some help at the point guard position. Chris Paul worked out for five all over the summer. They have a relationship. I think that makes sense. But they don't have a roster spot. And I think it's going to take a while for whatever market to develop for Chris Paul. The issue also is he had other interests in Milwaukee, Denver, and some other teams that had interest in him over the summer. But he didn't want to bounce out Los Angeles. And just last year, there was supposed to be a retirement tour. It was supposed to be a farewell tour. But obviously, it's not going according to plan. And I think, from what I understand, he's taking a break before he goes through like his next steps because he knows that this is going to take a while to sort through it. And he has to decide how he can make money outside of his town where his kids go to school. He's going to be able to yeah, but that, he said he was retiring after the season. So TBD on that for this season. By the way, is down 4 years old. He has played in 98 of his last 100 games the last 2 seasons. We're not playing 98 today. That's the Eastern. Thank you for that. You got it. How big is Dallas right now? Well, tonight we were there on that's the calling out. Let's go back to Miami. So now what do the teams do?
Hey Tanner, can you mute please?
Yeah, sorry.
Hey, David, do you want to run the PowerPoint or do you want me to pull it up?
I'll get it pulled up in just a second here. My apologies for delay. I had to look for a power cord because last time I was running out of power in my presentation and I hate to drop on you guys last second there. So give me just 1 minute to get that pulled up and we'll get this started. So thank everyone for your patience. All right. How is this for sound? Can people understand the words coming out of my mouth?
David, I can hear you fine.
Right. We're getting some yeses here. Hopefully nothing else weird going on. So welcome everyone to the South Dakota Department of Revenue Contractors Excise Tax Seminar, where we're going to show you all the things relating to construction work, how taxation works, and a few other nuances involved with this strange little portion of South Dakota tax law. My name is David Igaki. I am a senior revenue agent with the Rapid City office, and I have my co-partner here, Brant, who would like to introduce himself, please.
Yeah, Brant Etram. I am a revenue supervisor located in the Sioux Falls office. I've been here, 9 years. So started out as a revenue agent and do want to kind of give you a background about what we do in the business tax division, just so you guys know where we're coming from. We deal with a lot of taxpayer assistance where we'll receive an incoming call and, hey, this is the scenario. Is it taxable, not taxable? We issue licenses to businesses, and we like to get businesses off on the right foot. So we'll try and make that an educational kind of start when we kind of go over any tax laws that'd be applicable to a business. We'll go over filing, just little things like that. We deal with some compliance where we're kind of monitoring leads, whether that's a construction project or maybe it's an audit lead, or maybe it's just some information that we came across in a news article. We do collections and then we do reviews. So yeah.
So yeah, we put on a lot of hats in our roles with the Department of Revenue here, but today we're focusing on education and outreach as we want to, you guys are here because you're interested in what this is, or maybe you just want to get a refresher, or maybe this is a good opportunity for you to ask specific questions regarding South Dakota contractors excise tax. So if you have any questions, please either use the raise a hand option in Teams or post it in chat. Brant and I will be tag teaming slides here, so we'll be both monitoring this regularly. If you have a question, we'll either pause at the end of that particular slide of information or jump right in depending on the question and go over that with you. But please reach out because while we're here to educate you, this is also your time as well to either get some clarification or maybe bring up something a little more related to your business that might be useful to everyone else too.
Yeah, seminars do typically go a little bit better if there is a little interaction from you guys. So I don't imagine you guys just want to hear us talk for 3 hours straight, and hopefully it does not go 3 hours long. But this right here is just our disclaimer. So this allows David and I to make a mistake, and you can't hold it against us. The seminar is really just general contractors excise tax, so it might not fit your specific scenario. But if you ever do want something kind of in writing from us, I'd recommend that you guys do send us an email and we can get an answer to you in writing. Otherwise, use the chat like David said if you do have any questions for us.
And we'll post at the end of this presentation a variety of ways to reach out to myself, Brant, or one of our coworkers in the Department of Revenue through several means. So the first thing is, who needs the contractor's excise tax license? In South Dakota, this is required for anyone who's engaged in Division C work for in the Standard Industrial Classification Manual. What we mean by that is there's this nice little blue book that says, hey, in Division C, there's all these different industries, such as, of course, building houses a part of it, but also road construction, shelter belts. Actually, some forestry works kind of gets put into there a little bit, and several other things that gets put into this. We have a broader definition as well too for anyone engages in realty improvements, repairs, or installations that also kind of gets lumped into this, which actually dumps in, gets a few other industries with this too, such as some cleaners may actually need to get a contractor's excise tax license if they're directly involved with a construction project. And anyone who's then post project still doing work regarding to again repairs to property construction can still be involved with this and need that excise tax license. If you're still not sure beyond that, reach out to us. We'll let you know if what you're planning to do for your business or job will require you to take care of that and go over the steps on that process.
Okay, for licensing requirements, you're going to need an excise tax license for each business location. And that's not based on job site, but actual physical business location that you guys have. You're going to want to have a contractor's excise tax license before you start any work in South Dakota. And then here at the bottom, we just have a law. And this basically is just saying that any government agency that wants to hire someone to build or do a construction project for a public entity, like a school or a road or any other public improvement project, they can't give out that contract to a contractor unless they have a contractor's excise tax license with us.
One more thing I want to chime in on that too is this is for anyone who's gauging the work, regardless if you would actually be taxable or not. Subcontractors who are often not subject to contractor's excise tax still need this license because they're engaging in this work, even if there's not going to be direct taxability from that. This is just again a requirement from South Dakota law, as Brant noted.
Yep, and it does include contractors that are here just for one-time projects. We want all contractors to be on kind of the same playing field. So yeah.
Now, the excise tax rate is relatively simple. It's just a 2% tax, but this covers the gross receipts on the project, and this is charged to the prime contractor in the project. For our perspective, that's who is getting paid by the home or property owner to build the building, repair the building, install whatever fixture that they're paying them to do. Whoever's getting paid the money, that is what we consider our as a prime contractor. And the taxes on them, not their client. This deviates from sales tax a little bit, where sales tax is a tax on the transaction that charges those particular rates there. For us, if there's a construction project going on, the person who's getting paid by the home or property owner, the tax is on them. Now, the one weird thing with this is if you're doing a qualified utility project, I mentioned earlier, subcontractors generally don't owe excise tax. For qualified utility projects, we don't have an effective subcontractor exemption for it. Everyone working on the project is going to owe that 2% excise tax on the gross receipts for that work.
David, I do see we got a question. Are general contractors responsible at all for making sure subs have a contractor's excise tax license? That is not the responsibility of a prime contractor or general contractor. That is the Department of Revenue's responsibility to work on getting those unlicensed businesses licensed.
That being said, it's okay to ask for that, and it does help things make sure it's going to be good in your end. And at the very least, as a general contractor, if you are handing out working with subcontractors, you need to do your responsibility, give them the the prime contract exempt certificate. So make sure you do that at least. You have to fill out your portion. Ideally, you'll fill out their excise tax license number on there too. But as Brant said, technically it's not your responsibility. So as long as your details are on there, it kind of covers the bare minimum on that. Oh, and Tom, yes, actually, there's some industries that may need both a sales tax license and an excise tax license, depending on what you're doing. And plumbers, if they're selling more parts or just doing uh, normal services, for us to be like toilet unclogging or cleaning, that's actually a sales taxable service. But for actually replacing pipes, installing a toilet, something else like that, then that's what falls under the contractor's excise tax. Landscapers is another common one. We'll talk about that. There's a few other industries that will may or should have both a sales tax license and an excise tax license for their normal operations.
Okay, how do you determine if a contract is subject to contractor's excise tax? The first question we would want to ask is, does that service fall within Division C of the Standard Industrial Classification, which that again is the construction services section? And this is really going to cover anything to do with building or fixing, whether that's a house, a commercial building, a road, all the trades that kind of go in there as well, like electrical work, plumbing, concrete, roofing, and kind of so on. So, and I understand that you guys probably don't all have a standard industrial classification manual or anything like that, but there are resources online. You can Google siccode.com, and you can kind of list the service that you're providing and what the SIC code for it is, and it should pull up an SIC code for you. If that SIC code ranges from 1500 to 1799, it's going to fall within Division C of the Standard Industrial Classification, and it's going to be subject to contractor's excise tax. If it doesn't fall within Division C, you're going to ask a couple questions as, do these services entail the construction, building, installation, or repair of a fixture to a realty? If the answer is yes there, it's likely going to be subject to contractor's excise tax. We do have a couple exceptions for SIC codes that fall within that Division C from 1500 to 1799, and that would be floor laying and locksmiths. So some of those services, flooring typically is subject to sales tax, and then the locksmith services are typically subject to sales tax. So there's just kind of a couple exceptions where the rule is broken there.
And we do have a new question for this. The URL for the SIC code is just siccode.com. Was that correct, Brant?
Yep, correct. Okay.
And
I
we
might
have
have
from,
it saved in my favorites as well. Yep,
while
I'll
you're
copy
checking.
and paste it.
Okay. And Joseph Rust asks, for owner furnished materials, if the client has receipts on the materials or already has them before I start the job, do I pay excise tax on it? You're getting ahead of us, but yes, you do. Yeah, we dub the term owner furnished material, and you need to get a receipt if at all possible. If you can't get that receipt, then you'll use fair market value. We'll go into a few more details again later in this presentation, but the quick answer is yes, you do. And you want to get this question then, Brant?
Okay, let's see. What if you're a contractor laying flooring on a project for a build or remodel, just excise tax on the total project? So we'll get into this a little bit later as well, but you can charge tax specific to the specific service that you're providing. So you can line item flooring and say that's a sales taxable service. You can itemize sales tax, or if it's a project and we have a 25% rule, if 25% or more of the project is subject to contractor's excise tax, we do allow you to bill it all out subject to contractor's excise tax, even if you are providing a sales taxable service and a contractor's excise tax service, just to kind of simplify life for you for charging tax.
And I was gonna say, good question so far. We're already hitting the ball running for a lot of good stuff on this. Anything else? All right. So alluding to the second part of what Brand talked about in the previous slide is relating to what we call a fixture, because repairs, contractor's excise tax is applied just to construction, but any work done to fixtures within the property can trigger contractor's excise tax. This will be like heavy machinery that's bolted or plugged into things, or may have its own connected outlet. I know I issued a excise tax license for a business that was installing ice machines across the area, and they had to plug into public utility water line for that. That was subject to contractor's excise tax. They had to get licensed and pay that tax for that. So welders are often one of those industries that will both again have a sales tax and an excise tax license, because if you're welding, say, part for a truck, that's sales tax. That's easy there. But let's say you're welding a handrail and you're installing that inside of a building, or you're welding new stairs going for a part of a rock crusher for an operator to get on top of that. Those are big, large machines that they're not going anywhere. That's a fixture, and work on that is subject to contractor's excise tax.
What is excise tax due? This is going to be kind of dependent on the accounting method that you would follow. If you follow the cash accounting method, you're going to recognize the transaction when you receive payment from the customer. If you're following the accrual accounting method, it's going to be when that transaction is invoiced out to the customer. As for use tax, when the use tax is due, that's going to be either when the materials are received, or if it's owner furnished materials, that's going to be when the owner of the property, when the property owner furnishes the materials to the contractor. Kind of a common misconception that we will see is taxes due based on when the work is completed. That's not necessarily the case. So for example, say some work is performed in the end of June and you follow the cash accounting method, but then you don't receive payment until July, you're actually going to report those receipts from that project on the July return instead of the June return. And then as for the accrual accounting method, say there's a situation where it's a bad debt and your customer is not paying their bill. You can write off bad debts when you follow the accrual accounting method. So you say, for example, you invoice it out in June and you report it in the June period, but then 5 months later down the road, you don't ever receive payment from the customer. When you write it off with the IRS for income tax purposes, you're allowed to take that as a deduction as a bad debt when you're filing your contractor's excise tax return to recoup essentially a transaction that you never got paid for.
One more thing to tack onto that is also deposits. If cash accounting, same principle. If you receive a deposit, say in June for the work, do the rest of the work in June, invoice, but you don't get paid till July, then the deposit would go on your June return, and then again the rest of income on that July return once you receive that for reporting purposes. And it looks like we have a couple questions here as well too. Ben asks, what about used tax and items pulled from inventory? If your items pulled from inventory did not have sales tax applied, use tax would be owed on that, and that'd be at a time where you're using it for whatever project or job that you're doing at that particular stage there. This is where good bookkeeping comes in handy. Keep track of when you pull those from inventory. Again, plumbers are very common for this. You have both the sales tax license and excise tax license to allow you to get inventory for resale in that particular situation. And we have a long question from Josie here, so give me just a second to read over that first, or if Brant's already ahead of me there.
So Josie, it looks like you had a sales tax full transaction for a crane service, and you're wanting to know how to report it on an excise tax return. Is that what you're getting at? Okay. So the first part of a contractor's excise tax return is specific to contractor's excise tax. if you're to look at the return, I believe it's the first 5 line items that are subject to kind of the contractor's excise tax. The second page, there's a sales and use taxable line item where you can report a sales taxable transaction under a contractor's excise tax return, even if you don't have a sales tax license.
That's also useful for some contractors that may step out from construction work for sales taxable work. Like this time of year, snow plowing is very common for a lot of our outdoor contractors to maintain some money throughout the year. They can still do that, charge their customers sales tax, and report that on their regularly scheduled excise tax return.
Because I see
Okay.
you said you reported it in both parts. You likely paid too much tax in that scenario then, and are probably going to want to file an amended return and remove it from that top portion of the return, the gross receipt, since it's a receipt received for a sales taxable transaction. You'll want to subtract it out from the gross receipts line 1 of the return.
Yep. And you can reach out to call us and we can help step you through the amended return process for that.
Looks, and I don't know if we answered Joseph's
Not yet.
question. What if the job is at the end of the, say, June and goes into July? Again, it's really just based on when you're either invoicing out or it really depends on the accounting method. So cash accounting method, when you receive payment from the customer is going to depend on when you're reporting these transactions, or accrual is just when you're going to invoice it out to the customer.
All right. So we mentioned gross receipts before a few times here. And what do we mean by gross receipts? The general rule of thumb is everything you collect from your work. For generally, of course, it's going to be all the payment, but the payment is whatever you're charging for your labor. If you invoice out excise tax, we charge excise tax. We'll talk to you a little trick around that. Any additional payments or indirect payments will go through too, whether the homeowner might be sorry, often example would be a bank loan where the bank actually is paying a supplier for materials for you. You don't have to worry about it. What the payments the bank's making is still contribute to your excise tax calculations because that is part of the value of the project. We also have sweat equity we'll talk about in a little bit. Penalties. If you get penalized on your project for being late or causing errors, you do not get to remove that even though you got paid a little bit less. Those penalties on what you should have been paid but got deducted from whatever reason is still part of the value of the project. That's put on there too. So general rule of thumb is what do you collect from the customer, but there's a few other tricks to that as well too.
Gross receipts, and when we're talking gross receipts, we're talking line 1 of a contractor's excise tax return. But there's not going to be any deductions for amounts paid to subcontractors. There's not any deductions for the cost of services or labor purchase. This is where sales tax and contractor's excise tax differ a little bit. In contractor's excise tax, you're still going to include the tax that you collected in your gross receipts. In sales tax side of it, when you're reporting a sales taxable transaction for, say, the sale of a product, you're going to actually provide us a pre-tax total. Then you're also not going to have any deductions for expenses or losses. So an example would be, a contractor begins a commercial building project and say they bill the client for $500,000 for the project, and say due to material costs, increasing, or maybe there's some issues with the subcontractors, that your expenses and labor costs end up being $550,000. The contractor can actually lose money on a contractor's excise a contract and still end up having to pay contractor's excise tax. They'd still owe it on that $500,000 that they received in gross receipts from the property owner.
Now I mentioned sweat equity briefly. This is one of the weird situations where, yeah, you can homeowner wants to help out. Maybe they're trying to help out with, they've seen those reality shows. They want to pick up sledgehammer, help tear down the walls, have a little fun, and save a little money in labor costs. You can allow that. You don't get to deduct that out there because effectively they are working for you in this situation. We treat them as a subcontractor. So they have value to their work, and you would actually have to include what the fair market value is, generally whatever your labor rate is, what the common option is there, and that's still reported on there. So you don't get to deduct the cost for labor just because the homeowner is helping out with this. Now you should help out the homeowner at least by giving the exempt certificate, just to show that chain of, yes, technically you're working as a subcontractor, me reducing the costs, but for excise tax purposes, it's still part of the value of the project.
All right, indirect payments, they should be considered gross receipts to the prime contractor. This would be kind of where amounts are paid to others for maybe material suppliers, subcontractors on behalf of the prime contractor. Kind of an example would be, say there's a construction project and it has a construction loan, and the bank is just issuing payments on behalf of the prime contractor, say directly to a material supplier. And we'll see this a fair amount. Just, I think the banks like to kind of mitigate their risks just to ensure that the funds are only used for project related expenses. So indirect payments are still the responsibility of the prime contractor, even though the prime contractor necessarily does not receive any money in their bank account for some of those transactions. Penalties and liquidated damages, money or interest deducted for late completion, penalty, interest, or liquidated damages by the contractor may not be deducted from gross receipts. If the deadline is not met, penalty is taxable. So an example here would be, say a project finishes 10 days late, and there's a $1,000 per day penalty, and the total penalty of the project is $10,000, and say the original contract amount was $100,000, even though that prime contractor only received $90,000, they must still pay contractor's excise tax on the full value of that construction project of that $100,000. Award and bonuses. Here's where we get the best of both worlds. And if there's a contract that finishes early and there's a bonus for it getting completed early, the total amount of money that is received for that construction project, including the bonus amount, is going to be subject to contractor's excise tax.
And it sounds like Josie had a follow-up question here. For your example that you list for the crane contractor and putting for a sales tax, as Brant noted earlier, for any sales taxable charges, that's reported on the second page of the return. If there's a city tax that must be paid, the third page of our return covers that. As far as the didn't charge sales tax, you have to pay the use tax on that. You can invoice out the use tax you may owe on it if that's part of it. And if you invoice out the use tax, that's part of gross receipts because that's part of the money you're collecting. That's also part of your excise tax calculations. We'll talk about that a little bit later too.
Yeah, and Josie, I'd probably want to take a look at it. Crane services can sometimes be contractors excise taxable, and sometimes they can be sales taxable transactions. Kind of depends if they come with an operator and if that crane operator is actually installing something or physically attaching something to real property. So you can surely reach out to us and we can look into that a little bit further for you.
Now, we've been talking about it's easy to think of for cash in hand, but bartering still triggers contractor's excise tax if you're still doing the construction work. So if you're working on a deck for a rancher and instead of paying you in money, you'd say, here's half a cow's worth of beef. Sounds like a delicious deal, but you still owe excise tax on it, even though cash never switched hands. In that situation, you would use the fair market value of the meat in that situation, and that would take what you base your excise tax on as well. If you're just getting credit for it, though, you're not in the whole thing. So let's say, for example, a painter is working for a business that has air compressor that the guy wants, and they go, "Hey, you paint these walls for me, and I'll take $1,000 off of the compressor you want," and they agree to that. In this case, and then the contractor then pays extra $1,000 difference in cash. In that situation, the excise tax is only valued at the $1,000 that they both agreed is the value of the painting, not the $2,000 that the air compressor was worth in that situation, because they both agreed $1,000 was the fair portion for the value of that construction project. And if you invoice out any fees, like including building permits, if there's travel fees and similar stuff there, that is, again, part of your earnings for gross receipts, subject part of your excise tax calculations when you're going through that. And Renee's got a question. I think Brant's reading it first. What's here?
So very few times, Renee, when an owner hires each individual trade out, there can be multiple prime contractors for a construction project. The only time the owner of a property is considered a prime contractor is in spec building situations, which we'll kind of clarify later on. But otherwise, say I own title to land and I hire each individual trade out to build me a brand new house. There could be 10 to 15 prime contractors, and me being the owner of the property and I don't have any intent to sell it or anything like that. Each individual contractor would be deemed a prime, and they should be paying contractors excise tax on whatever I'm paying them. So the person that gets the permit isn't a determining factor in any way.
Your turn. Your slide, Brant.
Oh, Renee had a follow-up question here. Yeah, each individual contractor will just be responsible for their portion of receipts received for the project, not the total project. Retainage, what is retainage? This is just a percentage of each payment that is withheld until the project is completed. Once the project is complete and the work is approved, the contractor receives the retainage. And then when do you report the retainage? Again, it's based on the accounting method that the business would follow. If it's the cash accounting method, you're going to recognize it when you receive payment from the customer. If you follow the accrual accounting method, it's going to be when you get invoiced out to the customer.
So I mentioned before that if you invoice out contractors' excise tax, that's actually part of excise tax calculation. So if you do a small work project for $10,000 and you only put a 2% excise tax invoice to the customer, so you put $200 line on it, that would.
Yeah.
Oops, someone, I'm just going to mute you.
At least we
Alright.
don't hear snoring, David.
Like, with my voice, I hope that doesn't happen. But in that example, though, when you report that to us, you can't tell us that was a $10,000 job because the check from your customer says $10,200 with that $200 excise tax added. And we still tax you at 2%, and 2% of that number ends up being $204. You eat $4 out of pocket. So to prevent that issue, because that's a small job, but let's say you did $1 million project, that's $400. And if you did anything bigger, you can see how that scales. So to prevent this, we allow you to invoice at a rate of 2.041%. We call this a bid factor rate. This handles that recursive excise tax and excise tax. In that same $10,000 example, if you invoice excise tax at that bid factor percentage, you would charge your customer $204.10. And when you tell the state that you got a check for $10,204.10 on your return, we still only tax you at 2% because that's the actual excise tax rate. And 2% of that number is $204.08. You get to keep the pennies, 2 cents, because we're not going to go after anyone for 2 cents. But ultimately, you don't pay any excise tax out of pocket, and that's the goal here. We have a couple of tools at your disposal you can access through Department of Revenue for our bid factor calculator, a great online tool for the new contractors trying to figure out how much excise tax should I charge my customers? You can put in what you're charging for your labor, what you're charging for materials. So you put a markup on there. Is there owner furnished material on that? Uh, it's a great tool that just adds up all those numbers, tells you what you charge in excise tax for that. Now, uh, for salary question, Josie, I'll mention one more thing first before I answer that. Now, for invoicing purposes, you can invoice at 2.041%. That's the highest we allow you to use. You can also invoice at 2% because that's the true excise tax rate. And you technically do not need to even invoice out excise tax. I have some clients in the area I work with where they like a nice flat round number with the customer, so they kind of pad up to an even number and trust that their labor rate and everything is enough to cover the excise tax they're going to owe on that payment and work. Now, if you charge sales tax when you should have charged excise tax instead, one of two things has to happen. That means you overcollected in tax, but taxes are considered debts to the state, so you can either send it off to the Department of Revenue. You report it as a sales taxable job. You did it incorrectly, but you got that money anyway. Send it to us. The other thing you can do is you can refund that to the customer here. If you catch it before you file the return, then we can consider it no harm, no foul in the end. If you already paid into this and then you're trying to fix it after the fact, then you can file a amended return to fix it. But generally, when you want to see a copy of the check or invoice statement, wherever you refunded that overcollected tax to make that correction before we approve that. Jake, I'm not sure what you mean by all of this information. What I just mentioned is kind of tied to this one slide, although Brent would go over an example of how that bid factor percentage works besides what I just verbally mentioned to give you for a more visual think of, oh, now I see how that works.
Okay, here is a example of kind of showing the difference between using the bid factor of the 2.041% versus only collecting that 2%. So in this invoice, you can see what the contractor charged. They charged $10,000 for the material, labor was $5,000, and then miscellaneous expenses was $1,500, which would come to a subtotal of $16,500. If you charge that bid factor of 2.041%, the contractor would have collected $336.77. And then you can see the invoice total right there. The invoice total, that's $16,836.77. That's your line one total for gross receipts. So that's the figure that you're going to be paying contractors excise tax on, and you're going to be paying it based on that 2% tax. So you can kind of see the amount here. It is very comparable. It's 3 cents off, I guess. And then if you were not to use that bid factor, you can see you would only be collecting $330. So a little excise tax would come out of the business's pocket if you're not collecting based on that bid factor. Probably not a big deal for smaller projects, but it does get to be a pretty big difference for larger projects. So we always recommend contractors use that bid factor of 2.041%. So the customer is the one that's actually paying the tax and not the business.
All right, Joseph, the general answer is no. There's not a situation where you should be charging on a customer both contractor's excise tax and top of sales tax. Now, that being said, you may put some smaller sales tax charges if sales tax may be owed on a separate service that Brand made a couple examples of before, or if use tax might be owed, which mirrors the same rate on materials. You could put that in the invoice, but then the whole thing gets wrapped on excise tax in the end. So you're not going to charge a customer, say, 6.2% tax on excise tax and sales tax combined, but maybe separate sales tax lines on your invoice. Then the whole thing gets wrapped around that contractor's excise tax. That bid factor calculator worksheet that I put in the link for that in the chat, kind of notes a little bit about that as well too, if there's a sales tax charge or use tax charge you need to put on there. So something that kind of got brought up already, we've already briefly dabbled on, is owner furnished material. This is when the home or property owner is providing the stuff that you're using to do your construction work, even though you didn't buy it. And in that situation, it is still subject to excise tax. We don't have any loopholes of, oh, uh, XYZ Corporation wants to have an apartment complex built, and they got, $1 million worth of material to build it, so the contractor is charging labor on it. No, we still owe excise tax on the $1 million of materials there. Now, if at all possible, as I mentioned before, get a receipt because we want to get a fairest and truest value that's possible, but also that way you, the contractor, know if any taxes have been paid on that, which we'll talk about a little bit later. But if they didn't pay any sales tax on that, then you, the contractor using it, is responsible for it. If you see that, oh, they got all the stuff without sales tax applied, then you better invoice them for that tax because you're going to pay it. You might as well collect the money from your client to do so. And as noted before, this is that use tax and the owner first material is subject to the contractor's excise tax. It's reported differently though. Everything we've been talking about so far generally is just what you put on line one, your gross receipts. Owner first material gets put on the second line of your excise tax return, line two. Just kind of separate that because you technically never charge a customer for the material, so it's not part of your receipts, but we want to note that value anyway when we're doing our excise tax reporting.
Excise tax on owner furnished materials. The left-hand kind of side is more relating to an invoice, and then this is how it would actually look reporting it on a contractor's excise tax return on the right side here. So if you were kind of using that bid factor or bid, I don't know, what is it, the calculator, the bid factor tax calculator, it would kind of break it out similar to the invoice here on the left. You can see the total amount of money that was received would be line one of the return, gross receipts. The value of the owner furnished material was $500, so that would go on line two. The total amount subject to contractor's excise tax would be that $1,020.41, and then you would owe 2% contractor's excise tax based on those figures. And kind of by requiring contractors to include the value of owner furnished materials, this kind of ensures that the state is collecting excise tax on the full value of the construction project and kind of eliminates the loophole of, hey, you go buy all the materials and then I will just charge you for my labor and we'll only have to pay contractor's excise tax on our labor portion.
So something else we mentioned a couple times already is prime contractors, subcontractors. What do we mean by that? For us, the prime contractor is the one who's actually getting paid and enters into contract for the construction project. So generally, we'll often consider general contract, but necessarily those dubbed general contractors may not necessarily be the prime contractor. So this is
turn the TV
often
off and see what happens.
For larger operations where there may be a giant building being built. So we have ABC contractor building it, but they're from out of state here, so they hire some local general contractor to kind of be the one in charge for doing the actual building, and then the subcontractors out and whatever. The local general contractor isn't the prime contractor in this situation. It's ABC Construction out of state. And everyone under them would be because subcontractor, even that example, the general contractor situation. For us, a subcontractor is, anyone a prime contractor
Yes.
hires to help
Also,
out with
what are
this.
your thoughts?
However, if that is the case, though, then you have to get documentation to prove that for your own benefit. This is called the prime contract exemption certificate, which will be shown on our slide here. But the benefit of being a subcontractor, you don't owe excise tax for your work because the prime general contractor they're the ones going to take care of that and the whole thing, including any cost for hiring subcontractors.
Here are some of the characteristics of a prime and subcontractor. Prime contractor, they're going to need a contractor's excise tax license with our department. They contract with the owner of the property. They would report excise tax based on their gross receipts, and then additionally, any value of the owner furnished materials that would be provided to them. Contractors are also responsible for either paying sales or use tax on the materials used in their construction services. So if they pay the sales tax at the time of purchase, we'll recognize that tax. If there isn't sales tax paid on the materials, then they're going to have to self-assess use tax at the cost of the materials that they purchased and used in the construction project. Prime contractors are going to be responsible for issuing prime contractor exemption certificates. And then the prime contractor is the one that is going to be responsible for paying the 2% contractor's excise tax on the project. As for subcontractors, they're also going to need a contractor's excise tax license with our department. They're going to be getting contracted or hired from the prime contractor or another contractor. They're going to report the gross receipts in line 1 of the return. They are not responsible for the owner furnished materials. They do have the ability to take receipts that they receive as a subcontractor as a deduction on line 3 of the return. Subcontractors are responsible for either paying the sales or use tax like a prime contractor on the materials that they use in their construction services. They should receive a prime contractor's exemption certificate from the prime, and that's going to relieve them of having to pay excise tax on those construction receipts. And then, yeah, they don't have to pay contractor's excise tax if they receive that exemption certificate.
And Nicole asks, is a general contractor that subs out most of their work, or generally does so, be required to get a sales and use tax license and have a contractor's excise tax license? The sales and use tax license would only be required if the general contractor is doing sales taxable stuff. Now, that's a possibility. Maybe if they're hiring a construction manager, which we'll talk about later, or they're doing something else too, that maybe they're a landscaper as well. And besides doing general contracting, maybe they have an sales tax license for that. But otherwise, the contractor's excise tax license is generally sufficient for most contractors, unless they're doing the appropriate level of sales taxable stuff to require that kind of licensing. Correct. There is as you noted before, you can report sales and use tax on the second page of the excise tax return, and any potential city tax tied to that on the third page of the return. So as far as subcontractors, income you earned is still part of your gross receipts. You still have to tell us what you made as a subcontractor when you're doing your work. That goes on line 1 because that's your receipts. That's the money you've earned. However, if you receive a private contract exemption certificate for that work and it was allowable exemption for that, then you get to deduct it out on line 3, which is simply called deductions. And whatever happens to, if those numbers have to be met, okay, your taxability is 0. If you did a couple small jobs on your own as a subcontractor, where in this case you're primarily just doing small handyman work, then you may have higher gross receipts. Then the subcontract deduction takes out most of it, and you have to pay a smaller difference just on whatever the value of the smaller independent jobs where you were then the prime contractor for that. The exception I mentioned before is qualified utility projects. You can, as a subcontractor, you still cannot get that exemption certificate. You owe the excise tax. You're going to pass on to whoever hired you. We'll pass that on to whoever hired them. That's just fortunately the legal wording of how South Dakota state law works for qualified utility projects, which has its own tax code line in state law. Even if you receive the exemption certificate, if there's use tax owed as you, the contractor using it, that you still have to pay out and owe. But again, you could pass it on to the general contractor, who may then pass on to their client above. So you shouldn't have to eat that out of pocket, but you still have to invoice that out correctly. The one other thing I want to note is this is for subcontractors for construction related work. even if you're being related to a construction project, you may actually not have this particular example we're talking about here. Example for this is a general contractor who hires a landscaper to put in sod around a house that they just built to get that finalized. The landscaper, they're doing the sales taxable service. They cannot receive a contractor exempt certificate for it because they're not doing contracting work or construction work from our perspective. So they're going to charge that general contractor sales tax. They can't receive exempt certificate, and they'll have to pay the full amount there, and that gets taken care of like that.
Here's a example of a prime contractor exemption certificate. It's the prime contractor's responsibility to issue that. If there's a subcontractor and it's a situation where there's a sub of a sub, that subcontractor actually has to go to the prime contractor that has the contract directly with the owner of the property and get the exemption certificate from them to exempt themselves. They should not be issued for material suppliers or sales taxable service providers. And they cannot be issued for qualified utility projects. And then there are some requirements on this prime contractor exemption certificate. They're going to be required to have their contractor's excise tax license number listed on it. It's specific to the project location and then specific to the project description.
Oh, I've got a new question here. Can you explain what exactly are sales taxable service providers? You're getting a little ahead of us. We actually have a nice slide on some of that, but this would be anyone who's providing a service for the construction project, but we don't have that classified under the SIC Division C that we mentioned before, or is doing that direct realty improvement. So I mentioned landscapers. Brand also talked about flooring, where some sales taxable flooring, they couldn't, if there's been a contractor's doing a home remodel and they have a hire a flooring guy to put a new carpet there, the flooring guy cannot get exempt certificate because we consider carpet as sales taxable a flooring job. So we'll go and get a few more details, but there's quite a few things that actually may be sales tax per service provider related to construction project, but since doing sales tax work, we don't deem them a subcontractor as far as the exempt certificate and everything else we just talked about. And something else Brent just mentioned too is that it has to be project specific. So we cannot issue a blanket exemption certificate. So a general contractor can't go to you like, hey, here's a form here. I might hire you 2 or 3 more times this year because I thought you do some great work and just save that for your future invoice in case it happens. Doesn't work that way. You generally want one form for each job. Now, if that general contractor says, hey, I need you to do siding on 4 houses I'm building on lots A, B, and C on 123 Street, then they can list each one of those sites on the form, and that would be valid. I would still like to get one copy for each one, or you put each copy with your invoices for that. But as long as your invoice work address matches the exempt certificate to tie that all together, that's so good for us to know, oh yeah, that's supposed to be a subcontractor job, establish that relationship on why you don't owe excise tax for that work. Now, exempt certificates can be issued from various organizations. They basically what you would think would be sales tax exempt organizations, including the federal government, schools, and stuff. They can issue exemption certificates. They can't get out of owing excise tax for charges to them on this because the excise tax is a tax on the the tax on the contractor, but two, the U.S. government or state or those public organizations, they aren't prime contractors. This doesn't fall to them anyway on that. So they can't get out of it. They're going to be paying excise tax even if they don't want to. Oh, very good question, which again, you're kind of jumping ahead, which is great. We have all these questions, future thinking on things. Joseph asked for owner first materials, which are purchased in South Dakota, but used in a site out of state. What happens there? So South Dakota contract excise tax, I guess we didn't mention this specifically, but this only pertains to construction projects in state. If you're doing something outside of South Dakota, generally it's outside of our jurisdiction. Only thing that would come up with you is that you should have bought that with sales tax applied because your supplier, as a contractor, should not have found a way to not charge a sales tax for it. Beyond that, though, you would have to follow Minnesota's tax laws. I don't know how they do things. Think Minnesota actually is kind of weird with materials compared to South Dakota. So you may want to check what their requirements are there and contact their Department of Revenue for any specific intricacies with that. Because I honestly don't know Minnesota in that example.
Here's just another image of the prime contractor exemption certificate. Kind of at the top, it has some instructions and things that you should and should not do. It kind of indicates that there may be a 10% penalty assessed if you incorrectly issue a prime contractor exemption certificate. It's indicating you should not be issuing a prime contractor exemption certificate for a sales taxable transaction like a purchase of materials or a sales taxable service. You can see all the required fields that need to be completed. This form is a form available on the Department of Revenue website. Again, it should only be issued by a prime contractor and not a subcontractor ever. And if you don't have a prime contractor exemption certificate and you receive receipts relating to construction services, you're going to get treated as a prime contractor and have to pay contractors excise tax on those transactions. It's always a good practice to try and get that prime contractor exemption certificate as early as possible from that prime contractor. If you do ever go through an audit or a review or anything like that, we do give businesses an opportunity to still obtain those prime contractor exemption certificates, but you only have a limited number of days to obtain those prime contractor exemption certificates.
And kind of follow up on what Brant just said, as I tell my contractors I issue license to, as a general rule of thumb, until you get that exempt certificate, you invoice out excise tax because either A, they'll just pay the money and you're just going to treat it as a normal job, but at least your butt's covered there. You're not eating that out of pocket. Or B, they'll go, why is the subcontractor charging me excise tax? Oh, then they'll finally get around, get you that documentation, so then you can re-invoice them correctly with the excise tax. Because as Brant noted, the prime contractor should be on the ball with things, but ultimately, at the end of the day, if you don't have the documentation to back it up and you get reviewed or audited, you're going to be liable for owing that excise tax. And again, I don't want you to pay that out of pocket if you're indeed hired as a subcontractor and that was supposed to be the purpose of your hiring and how your taxability should be. So we already dabbled a little bit about this, but for as contractors, you have to get everything you're doing for your business with sales tax applied. The sales tax rate is going to be applied towards either the highest of where you pick up the materials or service or where it's being used, whichever is higher. So if you're doing a construction project out in Blackhawk, South Dakota, where there's no sales tax, but you're picking the materials from Builders First in Rapid City, you're going to charge 6.2% sales tax. We're okay with that. You're sure if you had to stuff directly sent to Blackhawk, where the tax rate's only 4.2%, and you would have saved that 2% tax on the materials, but you didn't pay less than that, so there's no tax liabilities there. The opposite, though, does mean that, let's say you somehow get a supplier for materials in Blackhawk, South Dakota, 4.2% charged. You're using it for a job in Rapid City at 6.2%. You would owe a difference on that. This is not just materials, though. This can count services being used, whether as a contractor, if you're hiring a bookkeeper, that bookkeeper needs to charge a sales tax for that. As we noted before, if there are services being used for the construction project that are sales taxable, like landscapers or hiring an architect to build designs for the project, again, sales tax must be applied in those things. If not, then a use tax will be owed, which is going to be the next slide.
Use tax applies if the supplier does not charge the applicable sales tax based on where the contractor receives the project. So kind of getting into sourcing of how a material supplier should actually source their transactions. If a contractor is picking up the materials at the store location, they should be charging state and city tax at that store's location. If the materials are delivered to the project location, sales tax should be charged based on that delivery location. So as for sourcing for mostly a lot of sales tax transactions, it's going to be based on where the customer first receives the product or service at. Um, and then also shipping charges, if tax is not charged on shipping charges, the contractor can be responsible for use tax because that is considered part of the cost of the materials. And then if the contractor later uses the material in a city that imposes a higher tax rate, the contractor must pay the additional city tax in the reporting period the contractor uses the material. And we'll see this a lot of times too, and it doesn't even necessarily have to be a city. I mean, maybe they have a rural location outside of city limits where they purchase the material, and then they bring that material in for a construction project inside of city limits. They're going to have to pay that additional 2% city tax when they use that material in their construction services.
Oh, that's a good question, Jenny. I think this relates to a recent court ruling. Would that be right, Brent, regarding storage of materials in South Dakota?
Yeah, um, we kind of changed our stance on it, and I don't want to answer that question and give you the wrong answer there.
Yeah. You're not the first person to ask me something about this. I'm actually kind of trying to do a little research this evening and afternoon to get a little more details regarding that. I believe the answer is technically yes. That being said, uh, hopefully the supplier initially charged South Dakota sales tax. They may not have, though. However, most states have also what's called reciprocity, which we'll actually kind of dabble into in a little bit later. But the quick part of that is if you paid sales tax in one state, we generally give you credit for that paid. If it happens to exceed what South Dakota's tax rate is, there's no tax liability. But if not, then you may have a partial or full use tax liability on that, kind of depending on the situation and the state. So the answer is probably we may have to follow up with that a little bit later. If you would have messaged us after this or something like that, we can try to arrange a time to kind of go over that in greater detail because this is, as I mentioned to someone else, I got follow up to. I've been gone for a little bit. This is very much really new news to me, and I got to figure out what the correct answer is and how to explain that correctly too. So this is a visual example of a use tax calculation here, in which case, as I mentioned before too, owner furnished material can trigger use tax if there's reasonable assumption or proof that it wasn't applied here. So in this example, the person had $10,000 worth of stuff from the homeowner from receipt, but didn't see any sales tax on it. So they know, oh, I use this in Rapid City. I'm just going to be 6.2% use tax owed. They invoice that to the customer, $620 on top of their $5,000 in labor. So they're basing their excise tax calculation on $15,620 between the owner first material, the use tax collected, and the labor charge that they're invoicing out at. Now in the invoice, though, we're just going to charge them the $5,000 for labor and the $620 in tax, and that $318.80 in the calculated excise tax from the math example on the left side there. And I guess because use tax is part of your gross receipts subject to excise tax. So this is kind of a nice visual example of how you should invoice it correctly so you're not going to eat either the use tax or that portion of the excise tax out of pocket.
I got a question there. If I pick up material at Menards and the job is in Sioux Falls, do I need to pay the additional state and city tax? Most likely, I would imagine Menards is located inside of city limits. You should not have to pay an additional state and city tax. We would recognize the sales tax that you paid at the time of purchase. So no additional use tax would be due.
Now, there could be a way around that. Let's say you order something from Menards and you had it shipped out to, let's say, is it Del Rapids? That's just outside of, I can't remember the area that's subdivisions right outside of Sioux Falls that's unincorporated, so it's non-tax. So it'd be 4.2% there. But then you have, oh, never mind, you're going to use that for a job in Sioux Falls city limits. Then there might be a 2% difference you might owe just because it is received and only taxed at 4.2%, but now using a higher tax bracket area, just kind of using the previous slide's example.
This slide just kind of shows you how you would report the invoice on the previous slide. So you can see line one of the return is gross receipts. That's going to be the total amount of money that you receive for your construction services. Your bottom line item total. Line two is the value of the owner furnished materials, and that was 10,000. Line five would be the total amount subject to that 2% contractor's excise tax, which you can see would be line 1 and 2 added together. And then line 6 and 8 is just kind of reporting the value of the owner furnished materials subject to use tax at the 4.2% state rate, and then the 2% Sioux Falls city tax.
So far we just talked about materials because, that's the most commonly kind of bought per project. But what we're talking about also includes equipment, whether it's something you purchase in South Dakota or something that you got out of state and you're bringing into South Dakota. Everything you're using for your construction project needs to have that sales tax applied at some point in its purchase lifespan. If not, a use tax would be owed. As noted, basically, for the equipment, the tax should be at 4.2, 6.2% if you purchase South Dakota and get delivered, received somewhere in South Dakota based off that. And again, if you get something out of city limits where you're only paid 4.2%, but then you're using in city limits later, then you're going to pay a 2% use tax difference on it. For someone purchased out of state, as I mentioned before, in most cases, we're going to give you credit on that based on the state and any taxes that were paid in there. Now, if taxes weren't paid, though, then there's a couple of things we have to take into consideration, including the age of the equipment, the potential blue books values, and so on, which we're going to talk about in just a little bit here. The one general rule of thumb with this, though, is if you got equipment from out of state, let's say you're from Minnesota, you bought a skid steer in Minnesota, and 8 years later, you're going to South Dakota, you're going to do some earthwork in South Dakota, but you've had the skid steer for 8 years. Since it's more than 7 years old, we're going to go, you know what, that's old. We're not going to worry about taxability on that. That's an exception to the rule there. Otherwise, for aged equipment, we'll use the Blue Book value for it if that's known. Otherwise, we'll use a depreciated value on the purchase price based off of the age of the equipment, what is brought into South Dakota. So you may have to pay full price on it, but you may have to pay something still, again, depending on what taxes, if any, were paid and the age of the equipment when it was brought into the state.
Materials removed from inventory. Use tax is due when material is taken out of inventory for unpaid, when tax is unpaid to use on a construction project. The tax is going to be due based on where the material is used. Additional use tax is due if material is removed from inventory in one city and used in another city. That imposes a higher city tax. We've kind of covered this quite a bit, I think, so.
All right. So first question is, what sales tax, if any, did you purchase on the equipment? And hopefully it was a Utah rate, which I imagine has got to be higher in South Dakota's. Most states are, but a couple of our neighbors like Montana and Wyoming have a lower tax rate. So if you buy that equipment at Utah at, say, 7%, if a sales tax was applied to it, and you bring it to South Dakota, it's already higher than any sales tax we'd have in here. There's no use tax liabilities, so you don't have to worry about that. That only is a big hiccup if sales tax was applied, because some states don't allow tax exemption for construction for certain construction items, or again, Montana or Oregon, where there's no sales tax at all, where this can get a little trickier. No, good question though. Can you pay use tax on inventory materials at time of purchase or only when it's taken out? So when you pay use tax on material at time of purchase, then that's a sales tax, and you're totally allowed to do that. The use tax is only triggered if you did not buy it with sales tax applied, and then to take it. Now, that being said, I do have some contractors that will preemptively pay use tax before it gets triggered. This would be contractors that I deal with that live in Blackhawk, South Dakota, I mentioned before, which is unincorporated, they're at 4.2% tax rate, but they know they're going to be doing work in Rapid City. So when they buy a new power saw from Amazon, they get charged only 4.2% sales tax. On their next return, even before they use it in a job, they'll often just go, hey, I'm going to pay the 2% use tax on it now just to nip in the bud. If you want to do that, you're allowed to. Now, if you change your mind on it, you're not going to get the money back, but you can do that preemptively if you want to in that situation, Ben. As long as you take care of it by time of use at least, then your bases are covered. In our case, if you do pay use tax on something, I would suggest save a copy of that return where you take care of that. I note use tax paid on new bandsaw, or use tax paid on skid steer at 2% for your city tax or whatever. So you have it for your own records that yes, you did take care of it and when too. And just in case we ask you about it, because if you get audited or reviewed, we can and we'll probably will ask you those questions. So one weird little situation with materials goes into fabrication here. If you are buying a common option for this is HVAC people who are building their own ductwork, but they're going to install that and charge a customer for this. So they go to an aluminum supplier to buy all the aluminum for the ductwork. Let's say they get the materials for $1,000 for the aluminum. They do set the ductwork. Now, when they're done, they see that ductwork be say worth $5,000. You do not owe excise tax on the new value of this ductwork here. The fabrication cost is not part of this. Now, more than likely, the HVAC guy's probably charging labor for it. So they're also paying excise tax for the time to build it, but they're not charging excise tax on the value of it, just only owed on the material cost of that situation, plus any markup they want to do too. So that's what the excise tax is based off of. Likewise, if there's a use tax owed, the use tax would be just on, again, the material wholesale cost, not the fabricated cost on that, or a markup on that too. The exception to that is if you hire out to have someone make it for you. So HVAC guy is overwhelmed, they hire another company to actually make it for them, then okay, now they're actually being reimbursed cost on it. Now there's a higher value that they're actually getting charged out for it. You're going to put the whole thing on it, and that's what's used for excise tax and use tax calculations in that example.
Here's just a list of sales taxable services, and if sales tax is not getting charged on these services, then the contractor is going to want to self-assess use tax at the cost in which they paid for these services. So a couple examples would be engineering, accounting, computer services, business consulting, surveying and staking, architectural planning, testing, rock crushing, carpet laying, locksmiths, inspecting, snow removal services, construction management, concrete pumping, and equipment rental. In South Dakota, generally the sale of all products and services are subject to sales tax unless they're specifically exempt by law.
So yeah, I know someone asked like, is a list of service providers? That's a pretty good general list there, but it's still not wholly inclusive. There's still other things that may fall into that. But ultimately, whoever's providing the service, they're the ones responsible for the sales tax on it. So ideally, they're going to charge that anyway. But if they don't, that's when the use tax may get kicked in there. And even for contractors, if you're doing sales taxable stuff, this is where you're going to need to charge sales tax on instead. I mentioned snow plowing before. If you're a welder who's just welding a part into a truck, which we consider tangible personal property, not real property, okay, that's a sales taxable thing there. And likewise, if the contractor receiving the benefit, say getting a skid steer repaired, they need to be charged sales tax on that from a service provider, or again, use tax. I know we're hammering that point real hard, but this is one of the most common causes of surprise back taxes to contractors when they're not checking their suppliers well and realize they're missing sales tax on their invoices, and thus they're going to owe surprise use tax. I don't want you guys getting surprises on that. That's why we're really hammering this in, that check those taxes, check those tax rates. If you don't see it, talk to them about it. If you're still not sure, again, give us a call. We'll be happy to make sure that, oh yeah, that sounds about right. Or no, we're going to take a look at this invoice together and double check things.
David, do we want to take a short break here right now?
Actually, yeah, we're about halfway through here. So let's take a quick 10-minute break. Let everyone settle down from all the beautiful information we've just unleashed upon you all and or take care of any needs you have. And we'll just come back and say 10 minutes. Sound good? I don't hear any no's. We'll go with it. All right. See you in 10. Welcome back, everyone. And it looks like we have a new question here regarding services and use tax. You use engineer for product out for projects stay in the US and you're located in Florida. All right. So first question is engineering charging any sales tax? That's the first question I would check. Uh, if yes, then as long as that sales tax rate's higher than 6.2%, you don't have to worry about anything we're talking about for South Dakota use tax. If there's no sales tax or for some reason it's less than 6.2%, then maybe it kind of depends on what's being used from the engineer's services, if it's actually being used in South Dakota or not, though. It's one of those things where you have to give a few more specifics for release. I can wholly answer that better, but the answer is maybe, but we have to know some more details.
I did have an opportunity to go through my email, and I did look up Jenny's question about simply just storing materials in South Dakota, but then using them in a different state, um, based on a recent court decision that the Department of Revenue uh, went through. They did determine that storage in South Dakota is constituted as use. So you would want to self-assess use tax on materials stored in South Dakota, even though you may use them in a construction project in a different state.
Thank you for confirming that, Brand. And in which case, then you might get credit for that for the you just for the taxes paid on that. But again, depending on the state where it's being used, and that's something they actually deal with or not.
Yeah, Jenny, I can send you an email if you just want to include your email here.
All right, Brand, if you're ready to kick us off for a second half here.
Yep, yeah. Equipment lease or rental. Without an operator, that's always going to be a sales taxable transaction. And then as for the sourcing of that transaction, the equipment company that is renting out the equipment, they should charge tax based on where possession is first taken. And then if the equipment rental company knows where that equipment is actually being used for subsequent payments later down the road, say they have a contract to rent a backhoe for a couple months, if they know where that piece of construction equipment is being used at, then sales tax should be charged based on that location going forward for subsequent payments. If it's not known where it's being used at, they'll continue to charge tax based on where possession first took place of that piece of equipment. As for equipment rental with an operator, this is where it can sometimes be subject to contractor's excise tax, or it still may be subject to sales tax. It really depends on what is being done. So an example would be, say, a company rents out a backhoe and it comes with an operator and they're actually doing excavation work. That excavation work falls under Division C of the Standard Industrial Classification and is considered a construction service. So that invoice would be subject to contractor's excise tax. As for a sales taxable scenario for equipment rental with an operator, an example would be like a crane operator gets hired to move a large piece of equipment, maybe an HVAC unit onto the top of a roof, but they don't actually install it. They just set it there. That would be a situation where it's just a sales taxable transaction because they are not installing that HVAC unit to real property. They're just moving it.
So one of their different tax situations is what we call a construction manager. So construction manager may actually be a contractor, but instead of actually doing construction, they're actually kind of just overseeing things, kind of like a giant supervisor for the thing. So in this situation, the construction manager is not paying anyone. They're not actually doing any of the actual construction work. And they're not hired, their contract literally says they're not actually hired to do the construction as well either. So if those things are true, then this actually ends up being a sales taxable service. At that point, there's being we consider basically you're as a consultant almost, if you will, but we're just basically just doing a management role, just make sure everything looks good. May have talked directly with the pre-owner about a lot of things, but actually involve the construction process. However, if that person is actually hiring in subcontractors, or at least even being involved with their payments, if they end up saying, you know what, I'm going to hammer a nail one day because I want to help out, well, they ruined it. Now they're doing excise taxable work because now they somehow got involved in construction of that as well too. And if that's the case, then they are a general contractor. They're probably the prime contractor situation and can issue exemption certificates. Kind of depends on the job, but if you're just overseeing things as a supervisor, you're not actually involved with any of the payments or anything like that, then you're a sales taxable service as just a construction manager.
There are some examples of realty improvement projects: heating and cooling, HVAC work, plumbing, concrete, remodeling, electrical work, carpentry, painting. When thinking about realty improvement projects, I always like to kind of just give the example of, um, and a lot of times these, first off, the realty improvement projects are going to be subject to contractor's excise tax, but and it's typically going to increase the value of the property. So I like to kind of always give the example: you have the exact same house, but then this one house has a new furnace installed into it. Which house is going to have more value? It's the house that has the new furnace installed, and it'll have more value to it. So typically, a realty improvement project is going to increase the value of the property.
So HVAC works in one of those industries where, depending on what you're doing, maybe it's sales taxable, maybe it's subject to contractor's excise tax. So obviously installing one, it takes care of that. Or if you're doing repairs to the system, whether you're replacing ducts or repairing a compressor, that's subject to contractor's excise tax. But you see, there's actually quite a bit of this that would be subject to sales tax. And generally, we consider as either cleaning or maintenance items where you're not fixing it, but you are just making it a better version of its state that was already operational. So if you're replacing air filters, if you're just cleaning the ducts out, recalibrating things, checking motors, just doing inspection of it, that is actually subject to sales tax. So you better charge the 4.2 to 6.2 sales tax based off the site of where you're doing this work there. There's several other industries that are kind of like this as well too. Maintenance contracts will be a little bit different based off of what the contract itself was written up as, if the contract's designed to be a monthly payment to do any small repairs on top of cleaning. That would actually fall under excise tax because the repairs were also a portion of that contract as written. We want you to do repairs too, but if it's just cleaning, then that's fine too. Just depends on what is covered and what the contract was written for in those situations. But for individual jobs, it's just based off of what you're doing in that situation.
The service provider is responsible for state and municipal sales tax on services. And when we talk service provider, we're not speaking about contractors' excise taxable services. We're speaking about a sales taxable service. They'd be responsible for that 4.2% state and applicable city tax, which most cities in South Dakota would have a general 2% city tax rate. What's really going to trigger contractors' excise tax is if you're repairing something and it's attached to real property, or if it's affixed to real property and you're repairing or replacing a part on say, for example, a furnace, if you're repairing a component, or if you're repairing a motor on a furnace or something like that, that's going to trigger contractor's excise tax. Sales tax is really more for the maintenance type kind of services, the inspection, the cleaning, the replacement of a filter, kind of things like that. And it's not going to include any replacement of parts. And as for transactions where it maybe includes both sales taxable work and contractors excise taxable work, You do have the option to either itemize the charges and charge the applicable tax based on that line item, or you can use our 25% rule where if 25% or more of that invoice is subject to contractor's excise tax, you just can charge the 2% or the bid factor of 2.041% tax on that whole invoice.
So kind of dabbling what I talked about earlier for warranties, again, it's kind of taxed on what the warranty covers or what the maintenance plan kind of covers for that. If it's just a maintenance plan, it's just we're just like, yeah, replace filters, make sure everything looks clean, and you do separate charges for any repairs, then that's just a sales taxable thing. The warranty is sales tax. If there's any charges or is any like just like a $5 site visit, then that $5 site visit would be subject to sales tax. But the charges for the warranty actually includes that repair to real property, as Brent just described earlier, then that's being Contra's excise taxable. Warranties can come in a variety of flavors for how they go, but ultimately it kind of determines on who's either covering it or who's going to be paying it. But it doesn't change the taxability of the job, but may change or affect what the actually taxes owed might look like.
We did get a question here from Nicole. It looks like, what about testing of manufacturing equipment services that was installed under the scope of a construction agreement? Would this be subject to separate sales tax? No, majority of that transaction is likely going to be subject to contractor's excise tax and meet that 25% rule. And to get to that 25%, it's really just based on gross receipts. So it can include the labor, materials, and any other fees that you're charging. So no, you do not need to itemize it and charge sales tax for that specific service if you don't want to. You surely can separate it out and charge the applicable tax for that service, but it's probably just easiest just to charge contractors excise tax in that scenario.
One thing I guess that's only tangentially related is post-construction cleaning. This is one of the few times I'm aware of. There's another example this will trigger too, where you take a sales taxable service, but because of how it's being used, converts it to a construction service. Post-construction cleaning is where we consider it as contractors get done building the house, but of course, there's a bunch of dust and maybe some little bits of debris and all that. So they hire a cleaning company to neat things up before the contractor says, okay, this is done. Here's the keys to your new house or to repaired house or whatever. In that situation, the cleaning service actually goes from a sales taxable service to a construction service under 1799, just all construction service not elsewhere classified. That's a unique version of that is will happen in one other example we'll get to a little bit, but yeah, that can happen. And in which case you could be given, it'll be a subcontractor more exposed case, you get an exempt certificate, but does change the taxability. That's one of those weird exceptions to the rule for something being a sales taxable service, but gets converted to an excise taxable service based off the timing and the nature of your cases being part of a construction project, where if the clean was done, say by the homeowner afterwards, or even the construction company after the homeowner had the keys, then that would be a sales taxable thing through and through. But being as part of the contractor hiring it before, saying project's done, here you go, homeowner, that actually makes that weird designation there. All right, so warranties from contractors. Oh, go ahead.
I think we've kind of skipped the manufacturer warranty.
Sorry, that was your
Slide
right.
a
That
little
was your
bit.
right.
Yep. Yeah. Manufacturer warranties, when a product is covered, whether that's a part or a service that's covered under a manufacturer warranty, and there's no separate charge, no tax is going to be due to the customer at all. And, say there's a part that fails and the manufacturer provides replacement part at no charge, there's not going to be any sales or use tax due in that scenario. Additionally, there's not going to be any owner furnished materials due or anything like that. So really the kind of key takeaway there is, if the manufacturer pays for everything and the customer doesn't have to pay for anything, it's all covered under that warranty and no tax is going to be applicable in that situation.
I've got another question from Joseph here. Can you clarify? Oh, can you clarify what would be a sales taxable service would be under excise tax? So we kind of mentioned a few examples here, but the general rule of thumb is if you are bolting something to the ground, if you are building a structure that's fixed to the ground, or connecting something to utility, electrical, water, the common ones, then this is going to be subject to contractor's excise tax. Anything else would be sales taxable. That's a general rule of thumb, not wholly inclusive though, because as I mentioned, there's examples, whether it's because from state law or from practice, where we don't treat it as such. But those are the general rules of thumb for that. And as Brent mentioned, the construction service generally is if your work would be found in Division C of this book, then yeah, it's going to be covered under that. So a lot of it's some common sense, but for some of the weird situations, we use those general definitions. And if you have to go further, then we'll delve into more, okay, hey, is this actually look like it's being part for construction and why, and then confirm from there. A long question from Josie. I think Brent's been reading it, so let me take a peek
Yep.
too.
Yeah, I'll take a stab at it here. Josie, I'm not sure if you're listing anything that would trigger contractor's excise tax in the scope of the work that you kind of provided to us. So it would be a sales taxable transaction. Yeah, I don't see any construction services, so treat it as a sales taxable transaction.
All right, now trying to work our heads here. We're starting getting some of the tougher subjects too. So now the warranties from the contractor, it can be a little bit like the manufacturer's one, where if the contractor isn't charging anything for it, then generally will be no charges due. But if parts would have a use tax owed on it, then yeah, that the use tax contractor would be responsible for that, even if there's no charge to the customer for their labor, or if there's a small charge, let's say a $500 deductible on this to cover everything on top of, then they take care of the rest. Then that $500 may be subject to excise tax if it's an excise taxable repair or a replacement versus a sales taxable one. So kind of depends on that, but it works similar to the manufacturer's one, but the parts will be a bigger difference on that since there might be a change in taxability on it, especially since the contractor again can't get the parts tax exempt on their end.
Service or maintenance contracts, typically service and maintenance contracts are subject to sales tax. So if that's for cleaning or calibration, it's going to be a sales taxable transaction. However, if that contract does include installation or repair of something that's attached or affixed to real property, that can trigger contractor's excise tax. So these service or maintenance contracts, the taxability of them is really going to be dependent on what that contract covers.
You see kind of recurring theme here. It feels like we're repeating ourselves a little bit, but just kind of there's something we talked about that gets kind of reinforced later here because we want to sound and hammer this because some of these can be kind of confusing. This is another example of an industry for construction work where, depending on what you're doing, excise tax or sales tax. We're gonna have a couple more examples shortly too. Here's a pretty good breakdown of what we consider a sales taxable thing for lawn care. So the general rule of thumb for why I put it is if you can remove it and use it somewhere else without having to rebuild it or anything else, it's gonna be subject to sales tax, whether you're laying sod where technically if you did a good job, you can lift up the sod, move it somewhere else. Trees, you can remove a tree. That is not subject to excise tax. That's a sales taxable thing for you to move a tree from point A to point B or just plant a brand new tree. Trimming trees, of course, too. Just doing lawn mowing as well. All that is because they're subject to sales tax. But things that are going to be more permanent fixtures or you're not going to be able to remove without breaking it down and having to rebuild it, that's going to be subject to contractor's excise tax. So retaining walls, setting up little patio plates, sprinklers is common because that one you're hooked up to water fixture anyways. That kind of is a big key That's excise tax. Shelter belt clearing, that's the weird example where I just mentioned removing trees would be sales taxable, but as for a shelter belt, we consider that forestry construction service, which is subject to contractor's excise tax. Those weird little twists of what you're doing changes the taxability of this. We do have a landscaping tax fact, which goes into a little bit greater detail of this for get sales taxable versus excise taxable and what you can do with it. You'll find that most of our landscaping businesses will have both tax types on there. So we can cover both their needs, particularly for sales tax license work, which allows you to make purchase for resale that just having an excise tax license wouldn't let you do. And we have a new question here. All right, I'll let Brand take Jenny's question. I'm going to read Ben's and get that one taken care of. So pardon us here as we're reading and analyzing.
Yeah, Jenny, I guess so. It looks like you're invoicing out for some additional expenses there. If it's an excise taxable transaction, there's not going to be any deductions for those type of things like gas, hotel, flights, labor, or anything like that. You're going to owe contractors excise tax on the total amount of money that you receive for the construction project, and you don't have the ability to deduct out those expenses. As for sales taxable, it's if it's a sales taxable transaction, there are very few industries that allow reimbursable expenses. Attorneys and accountants have the ability to take a reimbursable expense if they pay sales tax at the time of purchase and then they itemize it and don't mark it up on the invoice. They can take it as a deduction, but those are really kind of the only two industries that are allowed to take a deduction for those type of expenses.
All right, Ben. So assuming I have your question correct, hopefully I have this down. There's a line for provider owes sales or use tax on all supplies, equipment they use, with the exception of products that are resold. So I think someone else mentioned a plumbing business that uses stuff. So they have both sales tax and excise tax license because they'll sell parts, but they'll also use parts for their actual plumbing services sometimes. Because they have a sales tax license, the plumber can purchase parts without sales tax being applied. That's okay. But if they're doing something for contractor's excise tax, they should technically get all those parts with that sales tax applied because for contractors who are doing construction work, all the materials have to have sales tax applied, as we've said, hammered over many times. If they're using their own inventory that was purchased without sales tax, then a use tax would be owed instead on that. Your example for trees or fertilizer, though, those are sales taxable things there. So a landscaper can purchase trees and sod and fertilizer if they're selling it to the customer, sales tax exempt. If the landscaper is using the fertilizer, those for a service, then they can't get the tax exempt because they're using consume as part of their work. They're not actually just give it to the customer, kind of do with as they wish, kind of thing. And we have one more question.
Looks like Nicole has a question in relation to landscaping services. If these are subcontracted out by a general contractor, would the subcontractor be required to still collect sales tax from the prime contractor? But first, I guess, answer to that question would be dependent on the landscaping services that you're providing. If it's a sales taxable service, the landscaper should be charging the applicable sales tax for their services. If it's a landscaping service that's subject to contractor's excise tax, they do have the ability to accept a prime contractor exemption certificate, and they do not need to invoice out excise tax for their services. And then the second part of the question, on the accounts receivable billing side by the general contractor, would the general contractor report excise tax on the total landscaping charges, including the sales tax paid? Really, the general or the prime contractor is going to be responsible for paying excise tax based on the total amount of money that they receive from the property owner. The amounts paid to a landscaper wouldn't impact the gross receipts in that scenario. Flooring, this is one of the unique ones where depending on the material type of the flooring, kind of determines the taxability of the flooring. On our left-hand column is a list of materials, material types for flooring that are sales taxable. And then on the right underneath the picture, it lists the types of flooring that are subject to contractor's excise tax. It's kind of one of those unique ones that it would have an SIC code in Division C of Construction Services. However, there's been legislation passed that makes it sales taxable and not contractor's excise taxable.
Another example of a mixed industry, gravel work. If you are selling gravel to a contractor, you're just going to deliver to him. Okay, yeah, that's sales tax. That's easy enough there. Then it would ask you then to just, hey, can you lay this gravel out into a line while you're dumping it out? Still fine. Then they ask you to run over with your truck to help pack it in place. Oh, now you did construction work that makes it contractor's excise taxable. It all depends on what the service you're doing entails. So if it's just a sale, you would just leave it at that. But if you're doing anything else with the gravel, including blading, grading, or pressing into place there, or road maintenance, which we'll go into a couple slides, that becomes excise taxable. But anything else there where you're just going to dump it, you're going to crush it, you're going to spread it without doing anything else to it, then that becomes subject to sales tax, those situations there. If you are a seller of gravel, you can purchase your rocks tax exempt because that is your product and you can get that, or you can outsource the crushing service, you can tax exempt too. If you have the rocks, but you don't have the crusher, you can go to someone else like, hey, make a small gravel so I can sell it. You can still outsource that and get that tax exempt as well too situation. But if you're the contractor doing all that yourself though, and that you're going to use it for a construction project, then you would owe sales or use tax on that as appropriate.
Snow removal. This is a service that we'll see contractors obviously do during the wintertime when they're not, framing up a house or something like that. Snow removal is a sales taxable service. When snow removal is done for a political subdivision, such as a city or a county, which would be an exempt entity, the receipts received for snow removal services are not subject to sales tax as they're an exempt entity.
So highway contractors, this is going to lead into something else where there's a broader definition, what we consider subcontractors for highway construction related work there. Licenses are required for everyone who's involved with this. And there's a special highway contractors license that we issue to those individuals who are working along public roadways of some sort. This includes about anything related to this is going to be in the next slide, but just know you have the excise tax license and the highway contractor's license. So if you're doing work on these public roadways, we'll actually have a lot of people who get this after the fact and realizing, oh, I need something else to do this stuff.
Highway contractors, they do a mixture of excise taxable work, and then some of their work can also be sales taxable, depending on specifically what they're doing. So excise taxable work that a highway contractor may be doing: landscaping, mulching, traffic control, flagging, striping, seeding, sodding, erosion control, signing, pilot car operation. As for sales taxable services for a highway contractor: gravel crushing, architect surveying, gravel sales and hauling, engineering services, and snow removal.
So as something I mentioned before, This is one of your examples where, because of the nature of the contract and work, it converts it from a sales taxable service to excise taxable service. So the landscaping, including seeding and grass work, all that, normally would be sales taxable, as you see on their page. But if it's part of a highway contractor's project, then it becomes subject to contractor's excise tax, regardless of kind of what kind of stuff you're doing there. So that's one of those other situations where, yeah, you might need a different license type based off of what work you're doing, because the state law converts that to a different classification of industry and thus subject to contractor's excise tax. So another offshoot from contractor's excise tax is what I mentioned a couple times before, qualified utilities projects. So this is a different version of tax law for these particular projects, where instead of the normal idea of prime contractors owe excise tax, subcontractors don't, there's no tax exempt subcontractor list. Everyone owes a 2% excise tax on their gross receipts, but there's a few differences on materials, particularly from owner furnished material. That's like the one weirdest thing that doesn't get deducted, but there's that 2% tax for all this other materials that the contractors bring in, top of their own labor and everything else. So the big takeaway for qualified utility projects is, if you're working on one of those, you're not a subcontractor, you're going to owe the 2%. It'll just get passed up the chain if it's done invoiced correctly, but it's still you're going to owe the excise tax for that. The qualified utilities are listed on our end, so it's got to be for appropriate qualified utility project. Just because you're doing painting for, say, Black Hills Electric in one of their offices doesn't make a qualified utility project. But if they're having you paint a sign all along one of the substations, okay, there we go. Along with that, too, we have a list of these qualified utilities on our end. So not everyone can claim there are for that as well, too. But we have a list of what counts for this. This also includes some things like rural waterways and other things where, even though it's a utility company, but we consider that a utility for these tax purposes.
Spec builders, here is a list of kind of criteria for a spec builder. They're going to have title to the land. They're going to build a building on this piece of land with the intent to sell. They can be considered a spec builder even if they don't swing a hammer on this construction project. So they don't really have to do any construction work for it. They are required to have a contractor's excise tax license. They should be issuing prime contractor exemption certificates to any contractors hired for this construction project. They're responsible, like any other contractor, for either paying sales or use tax on the materials or sales taxable services that they use. And when we're talking spec builder, the most common example we'll think of is a contractor buys a bare piece of land. They build a new construction home on that piece of land, and then they have the intent to sell it. And when they ultimately sell that property, contractor's excise tax is going to be due, and it's going to be due based on the sale price of that property less the value of the land. There's no deductions for amounts paid to subcontractor. There's no deductions for your expenses, the material costs that go into it. Excise tax will be due based on that sale price less the value of the land. That is your line one total for gross receipts, subject to the 2% contractor's excise tax. We do have a pretty good publication on spec builders. It's a tax fact, so if you do any spec building, I recommend that you guys read through that.
One of the other weird nuances is often sometimes a contractor will build a house and they want to sell it. For some reason, it doesn't sell it. So they got a mortgage here. It's like, if I've got this property anyway, why don't I just live in it for a little bit if it's a brand new house? So they'll move in. When the contractor moves into their spec built home, that point they owe excise tax on it based off of, again, the fair market value minus land costs. If they actually did pay excise tax to subcontractors at that point for some weird reason, then that gets deducted out. They do get to deduct that out if they paid any excise tax at that point prior for whatever reason on that. But otherwise, they'll owe excise tax on the house. At that point, it's just a house for construction. We're going to treat it as a normal construction project. But let's say then next year, so this is now year 3, they finally sell the house. Hooray. Well, now they owe excise tax as a spec builder again. However, again, we give them credit on any excise tax that was paid, in which case the excise tax would be based off of the selling price of the house minus land cost is normal, but then any excise tax that was paid because they owed it when they moved into it at that point, use it for their own residency, that would again get subtracted out. They would get credit for that at least. This also accounts on homes that were rented as well too, so it doesn't necessarily just have to be uh, selling. If you rent it out at that point, so now as a home for lease, it still triggers that as well too. If it's been more than 4 years, so let's say the contractor doesn't sell it for until year 6. At that point, it's been long enough. This all doesn't apply as long as they pay the excise tax when they moved in at that point, and the contractor's covered in that situation.
Do have a question here, it looks like, or 2 questions. From Brock here. If we are a general contractor and we hire a trucking company to haul material to a construction project, would that be sales tax free? And we just owe contractors excise tax on that service? Or would the trucking company need to charge sales tax? So if the trucking company's responsibility is just to deliver the material from point A to point B, it would just be a transportation service, and transportation services are exempt from sales tax. So you would not be responsible for having to pay any sales or use tax on that type of transaction. And then what classifies a qualified utility project? These are going to be projects for utility companies, whether it's a electric company, a power and gas company, water companies. Those would be kind of examples of projects. If you're doing a project for that type of company, it's going to fall under that different kind of taxing of 1046B. And yeah.
We do have a tax guide for qualified utility projects as well too, which is good. We'll kind of mention a good source for all those documents and more later in this presentation. But yeah, we have a guide specifically on it, which defines like, here's some examples, or here's what we consider qualifying for that. And again, more details on those nuances on the difference between a standard construction project versus a qualified utility project.
The $100,000 rule, this is going to be applicable to new buildings built with a value greater than $100,000 that are built with the intent to lease to others. So when that happens and it's a new construction building, the prime contractor, the owner of the property in this situation, is going to owe 2% contractor's excise tax based on the fair market value of the building when it is first leased out. The contractor in that instance needs a contractor's excise tax license. And then if they perform part of the construction, they'd be responsible for having a contractor's excise tax license. If the owner is not licensed contractor and the owner and his employees do none of the construction, the owner is not a prime contractor and not subject to contractor's excise tax. So any contractor that property owner would hire in that instance would be deemed a prime contractor, and those prime contractors would be responsible for the receipts that they receive for their construction services in that scenario.
I kind of already dabbled this before, but if for the $100,000 rule, or again, even just a new construction thing, if the building is sold within 4 years of completion, then excise, oh, sorry, for the $100,000 rule, yeah, this is specific with that, is, yeah, if it ends up selling it, then we base the initial thing off of the fair market value, as Brant mentioned, but now we need to base excise tax off the selling price instead. Again, you do get credit for any excise tax that was paid when you used it for lease or renting, so you do get something out of that at least, but you will be paying a difference on that. So just kind of a hammery thing. read the spec builder's tax factory goes over all this because, yeah, spec building is a very different way of how we look at contractors' excise tax because of the intention for what's going on as a for-profit measure for the selling or leasing, not necessarily just the construction itself. One other thing to note about this too is if for some reason the fair market value is not really noted, then we code a few things on, okay, what's the insurance value for the house? Failing that, what's the appraisal value of the house? If you don't have that information, what's the property tax assessed value on that? If not, then we base it off of, again, what it costs to actually build the building for that as that fair market value before we again do subtraction of that from the selling price.
Portable buildings, lawn sheds and portable buildings are going to usually be subject to sales tax if they're built on skids and they don't have a permanent foundation. It's going to be a sales taxable transaction. If the shed is sold to a utility company, it's going to be subject to sales tax unless it's installed on a foundation. And then a fully wired shed, such as telephone switching stations, sales tax unless sold with installation on a foundation as well in that instance. So if it does have a concrete foundation and if it's bolted down, it's going to be considered real property and it's going to be subject to contractor's excise tax.
Oh, good follow-up question there, Nicole. So this is a rare situation. I'm surprised we have the slide here, but school-built homes. I think there's one school over East River that occasionally will say, hey, we're going to build parts of a house and assemble it on site or assemble it at our place and sell. If they built at the school and then sold, that's actually a sales taxable thing because they're kind of selling the parts of the house, but they're not doing any installation or anything like that. That's fine. Because it's a part of a school project, the materials can be purchased tax exempt too. This is also a weird little thing with that, but we're treating it as a sales taxable thing. That makes sense. But it's built on site though. Well, okay, now they're acting as contractors. That's subject to contractors' excise tax for that. If it's going back to the sales taxable thing, if a contractor's hired to do work on those sections built at the school site, then it's not subject to sales tax, but they'll have to, and we actually exempt from excise tax as a weird little thing with that too. This is just particularly for these school-built homes, which again, I think it's only one school out in East River that might do that still. I honestly don't know if they still are, but we have that rules just in case.
Tax collection agreements. We do have full tax collection agreements with 5 of the tribes, and that's to collect sales, use, tourism, and contractors' excise tax for Standing Rock, Rosebud, Cheyenne River, Ogallala, and Crow Creek. And then we have limited tax collection agreements for Yankton, Sioux, and then Sisseton, Wahpeton. Really, the main thing to know for these kind of tax collection agreements is it's the taxability of the transactions really aren't changing. It's just kind of how you're allocating the taxes when you're filing your return with us. That way we could make sure that the tax goes back to if you do a project on Standing Rock, the tax actually goes back directly to the tribe instead of the state.
So for the ones we have agreements on, we treat it as like, yeah, any other job, same 2% rate, all the other rules, everything else which applied just goes, it's just a change of allocation. With that being said, though, when you're reporting this again, make sure you're doing that correctly. There is a specific line for noting that, hey, you have to work on, we call it special jurisdiction for tax purposes, and then just allocating to the correct one there. It's a common thing to accidentally have people miss that, but make sure you do note that accordingly on that. Now, this is a reallocation of the tax dollars, not an increase of it. So you don't owe both state excise tax and a tribal excise tax for those governments. Just again, moving that money around.
Tribes without tax collection agreements, if there's no signed agreement with the state, there's going to be no contractor's excise tax if the contractor is an enrolled tribal member of that tribe. that controls the Indian country where the project is located. Contractor's excise tax is due if the project is by a non-Indian contractor on Indian country. It's going to be subject to the 2% contractor's excise tax, and it's going to get reported directly to the state, being that the tribe does not have a tax collection agreement with us. Sales by an enrolled tribal member on non-agreement Indian country controlled by that member's tribe are not subject to sales tax. And then the tribe may impose their own tribal taxes. I don't know if we get into, I think we do. I'll let you go to the next slide and talk about the non-agreement ones.
Yep. So, and for those non-agreement ones, we just streamline any or excise tax job goes to the state with this set of exceptions. If it's a tribal government project, so the tribal it's going to be on tribal land for specific tribal government purposes. It's being done by a tribal member as far as the contractor goes, and it's for tribe use only, and it's for certain types of buildings. Then it actually ends up being, I don't think there's any contractor's excise tax involved, but it has to follow these specific guidelines. If it fails any one of them, then we're going to treat it as any other standard excise taxable job on that. One thing to note too, I don't think we quite mentioned is even with tribal governments we have agreements with, they may have their own licensing needs. I think it was on the previous slide, which would be called a TECRO license or tribal economic contractor. I can't remember the name of the acronym, but basically they have their own contractor's license you may be required to get on top of ours too. So before you do work on any of the tribal governments, whether it's an agreement one or not, give their tribal office a call and double check, hey, I want to do this. They'll let you know if you need any additional licensing, but don't have any surprises coming your way because they are pretty strict about that.
Filing your excise tax return, we recommend that you guys sign up for ePath. It does a little bit of math for you. You can't get your paper return lost in the mail or anything like that. It seems like more and more nowadays we have issues with the post office and getting mail and things delivered in a timely manner. So do recommend that you guys utilize ePath. If you do ever have any questions, you can reach out to our 800 number or you can email us. And that's, I don't know if I've ever seen that email, epath@sd. I don't know where that goes to. If you have questions, email our business tax email, I would say, which is bustax@state.sd.us. I'll type that in the chat here.
But as Brandon said, we like people using ePath because besides it doing the math for you, you can do it any time of the day. You could forget about doing your turn on Friday. You could be on heading on waiting at the airport, ready to go to a cruise to Fiji or something like that, and go, oh wait, I need to file my return. You can still do it from your phone. Log in, file your return, then you carry on, enjoy a nice tropical vacation. If you need help filing, one of the neat things about ePath is anything you type on the return forms, we can scan our back end. So you can call one of our offices or our 800 number, and an agent can go over, look at your return with you, and follow along almost in real time, make sure everything looks good before you hit that submit button. Very useful for the first few returns while you're getting the hang of things, or if you have a weird situation, you need to make sure this is going to be looking good there. You can update your contact information on ePath. Check out previous returns for filing. Great when you're working on your income tax returns. You want to know, hey, what did I report? Especially for taxes paid, because that's an income tax deduction, I believe, in most situations. You can check on what those numbers are and more. So please, 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 if you are a new licensee or someone who is put it on paper, please look into ePath. If we suggest it as a great way to make all of our lives easier taking care of this step of your business.
There's just payment methods that we allow. I always recommend making an ACH debit payment using your routing and checking account number. That way you don't get charged a processing fee. If you do use any card, you're going to get charged a processing fee of 2.45%. So always recommend you use a routing and checking account number.
Now, one last thing to kind of go over before we step away from this. Actually, two things I want to mention. One is for records. As a South Dakota licensed business, you must maintain all business-related records for at least a 3-year period. And honestly, you want to do it for longer if you're depreciating things, or for the IRS if you're going to have a LLC or other corporation that you're basing things off of because they really like looking at those. So this includes well, anything you are using to keep track of your sales for your gross receipts, whether it's a paper ledger, a spreadsheet, if you're using QuickBooks, sales reports, just hold on to those. All your exempt certificates, receipts of purchased materials, and more. That Brent will go into a few more details in the next slide, but you can't have too much information, but you have to have it in case we ask you for it at a later time.
And I do see a question from Ben. If you have both sales and excise tax license, do you have to submit 1 or 2 returns? Each license is going to require its own return. So if you do have 2 licenses, it's going to mean you're going to be set up to have 2 returns to file.
And you do have to file each return, even if you don't owe anything, whether it's because you only did snow plowing on your sales tax license and didn't make construction work, you still have to file 0 for the excise tax license, whatever remains snow plowing, or vice versa. You got to file each return too. Otherwise, we're giving you phone calls or letters in the mail saying, hey, please take care of this so we stop hemorrhaging late fees and interest.
And here's just a list of records that we recommend you keep. Keep your tax returns, invoices, contracts, exemption certificates, and kind of any other supporting documentation that you have to show what you reported is correct. They're going to be essential if you're ever audited or reviewed.
And we mentioned a few times here, but if you need help or have questions, here's a nice little slideshow with a bunch of ways to reach out to us. So the business tax email that Brent just put in chat there too. Our Department of Revenue homepage, which you can access links for a lot of those things, including those tax fax forms that we were talking about before too, which is kind of linked on there. Of course, you can take care of your returns on it. Call their 1-800 number as well too. If you're near a local office, feel free to walk in. You don't have to have an appointment set to see an agent for assistance. Just please reach out by any means because all of us here much rather spend 15, 20 minutes going over a situation talking on the phone versus having a much longer call filing amended returns because there's some goofs we got to fix. And looks like we have a new question from Brock.
Lumber yards required to charge sales tax on the materials, or would we just pay contractors excise tax on the goods price? Yeah, you're going to want to pay sales tax to the lumber yard. And if not, then you're going to self-assess use tax at the cost in which you paid for those materials, the wood or whatever it may be, screws and other things.
Yeah, I do have some people who are like, wait, that's double taxation. It isn't. There are 2 different taxes for 2 different situations. The sales tax is just the tax on the transaction, but the excise tax, including on the cost of the materials, that is a tax on you, the contractor, for the entirety of the construction project on those gross receipts. So, yes, even though we're assessing a tax on the second time, it's actually your tax, not the lumber's tax in that situation that's being assessed there. But ideally, you're going to invoice your customer correctly and pay that invoice them for it anyway, so you don't have to worry about that out of pocket. And as we mentioned before too, if the sub is doing a sales taxable service, you're probably going to still owe that sales tax on there. But again, you're going to pass that cost on to your client as part of your gross receipts to recoup that anyway, and then you can owe excise tax in the whole thing. If the subcontractor is doing excise taxable service, then they have to get all their stuff sales tax applied, but from your end, just going to get the exemption certificate. I hope you do anyway, or the general contractor who hired you, if you're not the prime, to pass on to them so they don't owe excise tax and then pass that on the chain there if they're allowed to.
Here's just a location of our field offices. So you can come into any one of our field offices and get assistance from an agent. And we did just have 2 field offices close here back in June of 2025 here. That would be our Mitchell and our Watertown offices, but we still have these offices available. And then here is the phone number for each office. If you are going to stop in for getting help or anything like that, I do recommend that you just call in advance, but it's fine if you don't have an appointment as well.
And this is the question side, but one more thing I do want to bring up that doesn't come up here because it doesn't involve contractors' excise tax, but as I mentioned before, I don't like you guys getting surprises here if I could help it, is everything we're talking about is at kind of the state level because we don't actually have a state contractor license, but we have the excise tax license substitute. But because of this, each city or county may have their own rules with contractors. So, besides, of course, getting our tax license as part of the requirement, I would suggest before you begin work in the city or county, double check with their office. Go, hey, we're doing the XYZ work. Do we need additional licensing? Some places are pretty lax and just want to know what your excise tax license number from us is. You give that to them and they're happy as a clam, as long as that matches the building permit. Other places, you have to get their own city licensing with various levels of strictness or even additional requirements like Rapid City. You actually have to take a test to become a general contractor in Rapid City. If you don't pass that test, then their building inspector finds out you're gonna have a bad time. So as well, on top of everything else we just mentioned, don't forget to reach out to your local city or county governments that you've been doing your work in. Just again, make sure there's no surprises. So, is there anything else? You guys have been doing a great job asking a lot of questions mid chat here, which is, as Brent said, a lot more interesting and very amazing there. But if there's anything else, we'll take those right now. And if not, again, we gave you all the contact information. Please reach back out and we'll go over those things with you too. Or one of our coworkers, I guess, as well. Hey,
Yeah,
you want to welcome the call.
Thank you, Nicole. I can include my email too. If you guys do have any questions that you don't want to ask in front of the rest of the group or anything like that, feel free to email me and we can get a response to you.
Let's see, and everyone that pre-registered early enough should have already gotten the email with a PDF of basically the slide presentation. So you should have that. And as a YouTube version of this, once this gets edited to remove a lot of the dead space from before and earlier, that will come up on our South Dakota Department of Revenue YouTube page if you need to revisit this as well too. So this will, given the holidays, it may be a little bit longer turnaround time on that, but this will be available later if you want to double check this just to hear our lovely voices and see things in motion versus just reading that PDF you should have already received.
Thank you, guys.
All right. Well, you have a wonderful rest of the day. We'll give you extra half an hour of your lives back from our normal time. And you take care. You have a wonderful rest of the day. And may your contractor's expertise now be better. Oh, got one question here. If you're a subcontractor, you should know what the excise tax on that. Now, that being said, if the homeowner has some of the material you're using for that, try to get a receipt from them because if they didn't pay any sales tax on it, then you would owe a use tax. That would be the one tax type you would owe. But if you're a subcontractor, you should know that. But hopefully, then you've gotten that prime contractor exemption certificate we mentioned. If we didn't, then you're currently on the hook for that until you get that from the prime contractor on the project. So please take care of that.
You guys.
All right. Take care, everyone. Have a wonderful rest of your day.